I'm wondering how the role changes during an administration such as this versus a previous administration that doesn't necessarily call climate change a scam.
Yeah, major differences, I suppose, from a U.S. perspective. I guess I always like to start in the context of carbon, which is a $1 trillion asset, where most of the assets are actually in the compliance markets, which are local, regional networks of ETS-traded schemes. And that is not changing based off of who's in the White House in the United States. A lot of work and a lot of attention is focused on the voluntary markets, where these are voluntary actions by corporations, which again are not swayed by who's in the White House. And we see that there's still a lot of conviction in the carbon markets more broadly. And again, when you think about it in the context of a $1 trillion market, with the bulk of it being in these regional ETS schemes or these carbon tax schemes across these regions, there's not much change as it relates to this space.
So major companies are buying carbon credits. It's all continuing as it has that we've seen over the last few years.
Again, when you bifurcate out the $1 trillion marketplace with 90+ of the market being in the compliance markets, those are regulated assets. Those
so
are
they have to do it.
They have to do it. What we spend a lot of time talking about in the carbon markets, where there's a lot of attention, is going to be in the smaller portion, which is a couple $2 billion marketplace on the voluntary side. And what you're seeing, and as we discussed before, is there's a pullback in terms of the communication of the work that a lot of major corporations are doing, but nonetheless, they continue to buy carbon. What we're seeing is that they're actually making longer-term investments, signing long-term 5-year offtake, really leaning into this space, but they're doing it more quietly than they were perhaps a few months ago.
Is more quietly the only change, or is the actual rate of what they're buying and how they're buying changed?
No, I think what you're seeing is that the quantum of what is being purchased and signed up for long-term offtake is actually increasing. The quality is increasing. The longevity of the contracts are actually increasing.
Nobody's talking about it, though.
But it's very quiet.
Why is it quiet?
Just as you can imagine, I think everyone is looking to ensure that they're out of the spotlight, out of the crosshairs, and quietly doing the work that they know that they should be doing. One other area beyond carbon, I think that you're seeing here at Climate Week, is this convergence of traditional energy and renewable energy or alternative energy, where really they're coming under one tent. We heard yesterday from the chair of the Energy Dominance Council from the Trump administration talking about the 3 priorities of the administration. One is to have abundant domestic energy, where there's traditional and renewable energy coming together to power AI, which we don't even know how big that requirement is going to be, to supplying our allies with all the residual energy that we produce here in the U.S. and ensuring that there are deals being struck with our allies. And then third, which is a little bit of a wild card, is nuclear energy dominance, and that is a big focal area for the administration as well. So energy dominance.
What's the reality when it comes to traditional forms of energy, carbon-infused energy versus renewable, whether it's green, whether it's wind, whether it's solar? I know nuclear kind of plays within it, although some would say you got to worry a little bit about the waste and so on and so forth. But I mean, folks are not turning their back on renewables.
No.
And has there been any shift? Because, Chin, you often bring up the president is very vocal about how he feels about wind. I know there was a ruling today, though, that is allowing a project to go through, I think, the one in Rhode Island.
Yeah, and so Ørsted shares are higher as a result.
Right. So it's just, trying to understand, as we say, the narrative that sometimes we're hearing in public versus what's going on behind the scenes. It's still moving ahead in terms of the renewable and green space.
The reality is that the renewable space has turned to be economically comparable to a lot of traditional energy sources at this point. So without subsidies from the U.S. government or from governments around the world, these projects are viable. They're economically viable. They compete. They have to have, they compete in areas where there is heavy wind flow and there is sun, abundant sun, and there is abundant kind of energy sources from these renewable spaces. But nonetheless, they're economically viable. So they'll persist despite rhetoric.
But are they economically viable without government
Yes.
support, without government tax incentives?
Yes, I think in a lot of instances you see that these are economically viable. You see less and less subsidies being flown into major solar renewable energy projects at this point.
I'll ask the question another way. Are they viable with tariffs?
I suppose you could say, again, when you think about it from the all of the above solution set, there's going to be parts of the United States that are going to have economically viable renewable energy projects that have no oil and gas. And there's going to be parts of the United States that have oil and gas but don't have consistent sunshine or consistent wind flow. So it really just depends upon where you are in the United States. And absolutely, when you think about the role of tariffs coming in, any import is going to be impacted. And so therefore, you come to the same conclusion, which is energy dominance from a domestic supply chain.
The cost of power, and the president talked about it being more expensive here. Is it because of AI that power is more expensive? Is he right in terms of the big picture?
I think it's very regional, right? The cost of energy, I'm from California, and the cost of energy is high. Then there's parts of Texas. We were recently in a part of Texas where folks who are taking power from the grid at certain times of day are actually getting paid to take the energy off of the grid because there's an oversupply, largely from renewable energy projects, plus all of the fossil fuel industry across Texas. So it's so localized and it's so regionally dependent based off of a lot of state and local regulations and taxes, less so than at a federal level. And then I think you can say the same across Europe and across other parts of the world as well. It's very localized.
I know we want more time. What would be your advice to investors? I mean, based on what you are seeing, just got about 30 seconds here.
Look, I think we're really focused on doing more with less, looking at your supply chain, trying to find ways to clean the supply chain, but also utilize more assets in your supply chain. There's a lot of waste when economic boom is in place. And now if you see a little bit of a contraction, now you have to do more with less. So find ways to clean up your operations and create more efficiency.